Hey guys, so I'm guessing most of you who have subbed to my channel have noticed by now that I put out quite a few presentations and tutorials on accounting. Time to time I actually am going to be taking questions regarding any of my tutorials and questions you might have within your course that might be relevant to managerial, financial accounting, and so on. So, this week I decided to take one question from a subscriber, and I'm going to put it up, and hopefully most of you get some benefit out of this because it's also very similar to a bunch of questions you'll probably have in financial accounting. Alright, so let me just take it up right there. And it has to do with journal entries, and we're going to prepare an income statement. So I'm going to essentially analyze the transaction and prepare the journal entry simultaneously, and we'll run through it quick as lightning. Alright, so let me just create a layer. Oh, actually, I do have a layer already up, so we'll start right away. Okay, so we deposited $200,000 cash for capital in our operations. So, cash is going to be added to the books of our company, $200,000, and we're injecting capital into our company. So, we're increasing our capital account and we're increasing our cash account. So, debit cash, credit capital. And capital, you'll find that in your equity portion of your balance sheet. Alright, next one is we paid $40,000 for land. So land is an asset, we're increasing that asset. So it's going to be increased by $40,000. And cash is being decreased by $40,000 because we're spending $40,000 to purchase the land. Next question is office supplies on credit. So we can debit supplies since we're getting an asset, and since we're paying on credit, we're going to be increasing our liability by 500 and debiting our supplies by 500. Alternatively, if you use supplies in this month, you can just go ahead and do supplies expense and accounts payable instead, and then 500, 500. Alright, but I'm not exactly sure if they actually did use the supplies within April, so I'm going to stick with my first part, and we're going to use this entry. And next one is we received cash from our customers. So when you provide a service, you obviously receive revenue, and we provided a service, so we're going to get cash, and our service revenue is going to increase. And we debit cash because it's an asset and we're increasing it, and we credit revenue because we're increasing revenue. And we earn this revenue because we performed a service. So it's going to be 5,500. Always make sure to look if you've earned the revenue, because if not, then it's going to be considered unearned revenue. Next one is we purchased a fax machine. Fax machine is considered equipment. And equipment is an asset, so we're increasing this asset by debiting it, and we're using cash. So debit equipment 3,000, credit cash 3,000. The next part, I'm going to have to erase this and use a different layer because I've used up all my space. So we're on to this one, which are the expense entry. And whenever we have expenses that we're trying to increase, we're debiting them. So rental expense, salary, and utilities. And these are all being increased by 1,200, or by their respective amounts that are listed right there, because we've essentially used up our rental. We've used up our rent for the month by essentially renting it out for the entire month. We've used salaries of our workers, and we have to pay for utilities because we also used electricity and other things for the month. And we're paying for them in cash. So if you add these up, 1,100, 1,200, and 400, that should get you 2,700. and that's going to be credited to cash since we're essentially losing cash. This transaction right here is going to refer back to this transaction since we're paying off the accounts payable. So since we're paying off the accounts payable, we're going to be debiting accounts payable because we're getting rid of the liability that we owe to Muna because we paid on credit, and we're going to pay them with cash. So debit accounts payable 500, credit cash 500. Next one is owners invested $2,000 in the business, which is exactly like the first one. So we're going to have cash increasing and capital increasing by $2,000 each. Finally, the last one, we sold land for cash of $22,000, and the original cost is $40,000 for land. So we're going to be receiving cash of $22,000, and we have to write off the land asset since we don't own it anymore at cost, which is $40,000. Now there's kind of a problem here because obviously this doesn't balance, so what we're going to have to do is we're going to have to debit a loss on sale. Because it was worth $40,000, we sold it for $22,000, which means the remaining difference, which is $18,000, is going to be considered a loss. So those are the transactions and essentially the journal entries. And let's go on to do our quick income statement, which should be very small since we did not have many revenues or expenses. So we have revenues, we have expenses, and we have a loss. So the loss on land, let's just put that down there right away, which is $18,000 loss. Our revenue, going through this, the only revenue I remember was, I think, the $5,500 cash. So we have service revenue of $5,500. We have expenses of rental, salary, and utilities of $1,100, $1,200, and $400, which add up to $2,700 of expense. And once you summarize this, you should have the revenues subtracting the expenses and subtracting the loss, which should get you $5,500 minus $2,700 minus $18,000 is a net loss of $15,200. So $15,200. So net income or net loss. The loss is in brackets because brackets indicate that it is a loss. Alright, so that is essentially our income statement, and those were all the journal entries. I'm just looking through it one last time to make sure I didn't miss anything. I think that is it. Alright, so if you have any questions about this answer video, make sure to leave it in the comment section below. Subscribe, and you'll be entitled to send me some questions that I'll probably be answering in the future. Alright, so I'm going to be working on some managerial accounting videos today, and hopefully you guys check those out. Alright, see you guys in the next presentation.